Stock trading can be one of the best ways for someone to build individual wealth. The problem is there's so many different strategies out there that beginners get analysis by paralysis. They fill their charts with different indicators. They don't know what platforms to use. And before they know it, they're losing money and giving up, which is a real shame because anyone can make money in the stock market if they have a tried and true and disciplined strategy. So that is exactly what we're going to do in this video, and I'm going to show you exactly how to be a successful trader in this market. Let's get right into it. So the first thing you're obviously going to need to do is get a device to trade on. Ideally, a desktop or laptop is best because it really helps you see your indicators more clearly and just gives you an opportunity to have a better view. But if needed, you can use a mobile device, as most platforms are mobile friendly. So now that you got your device, you need a platform to trade on. I've tried a ton of different platforms, signed up and created accounts only to find out that I absolutely hated them, whether they were clunky and outdated or they were just very limited and simplistic. However, after a long search, I have actually found a combination of two platforms that I like to use. So I actually like to buy and sell my stocks on Webull. Reason being is they have by far, in my opinion, the absolute best platform when it comes to a P&L. You can very easily track your trades and how it compares to the S&P 500. You can see how you're doing on a yearly, monthly, or daily basis. You can look at certain tickers and see in the past whether you're historically up or historically down on those tickers. And there's so many different other opportunities that you can take advantage of with the P&L. So I use the P&L for Webull. However, in my opinion, it is somewhat limited when it comes to technicals and having certain stock indicators. It is efficient enough and you can absolutely get by. So if you want to use the P&L and you don't want to have multiple platforms, you can successfully trade on Webull. And a lot of traders, such as Ricky Gutierrez, for example, does actually use Webull for trading. I personally really enjoy the ton of different options and trying new strategies on TradingView, so that's the platform that I use. So you got your device, your platform, and now let's get into the strategy. All right, so we have the S&P 500 opened up on TradingView, and it is a complete blank slate. We have none of my indicators on here, but I'm going to give you the exact ones that I use and how I use them. But first, I want you to think about your indicators as tools, as if you are stranded on an island, and successful trading is getting you off that island. The reason why I want you to think about it that way is because I want you to think about as little tools as possible, right? If you're on an island, you have as little tools as possible. This is to avoid analysis by paralysis. So the first thing that we're going to need is an overall directional indicator, something that is showing us whether or not the overall momentum of the stock is going up or going down. What I use for that is the HA Market Bias Indicator. It is by Professor_X, and it is called Market Bias. It used to be called HA Market Bias Indicator, and I want to let you know that in case the creator of the indicator changes the name back. The reason why it was called HA Market Bias Indicator is because it stood for Heikinashi, which we will get into in a little bit, as that is also important to our strategy. So over here in this corner is where your first indicator is going to be, and we're going to need to change some of the settings. You can see here that there is a red line and a green line, but there's a lot of individual lines in between there. We want to get rid of those individual lines. It's just repetitive and unnecessary. I don't remember exactly which check it is, but I know it is one of these. So we are going to X. There it is. So it is the Show HA Candles. Okay, we're going to get rid of the Show HA Candles and we're going to click OK. Now you can see the direction very more clearly, right? So what this is showing us is that when the HA Market Bias Indicator is red, we are in a downwards momentum. when the HA market bias indicator is green, we are in a upwards direction, upwards momentum. And so our beginning rule is that we do not want to go short when the HA market bias indicator is green, and we do not want to go long when the HA market bias indicator is red. This is very important to stick to. If you are not sticking to this, then you are not going to be successful in this strategy, as this is a foundational element of the strategy, okay? So the second indicator we're going to need is the Bjorgum cloud, and I'm going to explain exactly what that is in a second. It's the Bjorgum triple EMA strat, and we're going to X this off. And again, there are a couple modifications that we are going to need to do, but at first I want to zoom in to show you exactly what we are going to get rid of. So you can see some of the green candles are colored in red, some of the candles are colored in white, and then some of them are colored in blue. Now this just helps you sift through a lot of the noise and helps you really actually just track the cloud versus the individual candle. However, we like to use Heikin-Ashi candles with this strategy, so that is not needed. So we are going to click the settings, we're going to go to style, and we're going to X off of the bar color. And you can see that those went away. So now we have direction. The reason why we need this addition, this Bjorgum EMA strategy, is because we don't just want to enter at any point so long as the price action is above the HI market bias indicator. We want to actually enter a position when the probability is higher that we are going to go up versus go down, right? Because as you can see back here, eventually we go down and we change momentum. So we are going to enter, so far in this strategy, a long position when we are in a blue cloud of the Bjorgum EMA strategy, the triple EMA, and we are green on the HA market bias indicator, and we are only going to go short when we are red on the Bjorgum cloud and red on the HA market bias indicator. Now, there's a couple other things we need here. First, we are going to add what is called the MACD. MACD stands for Moving Average Convergence and Divergence. We're going to X this off. Now, there is a personal preference that I like to use, and that is changing the orange signal line, changing the signal line from orange to yellow. I just learned on a indicator, a MACD indicator, that was blue and yellow instead of blue and orange, and that became my preference. The MACD line, there is a middle line right here. Let me zoom in so you can see it. And we are going to change that color so we can see it more easily. That is called the zero line. We're going to change it to white, and we're going to change the opacity to 100. You can change the thickness if you want. For the heck of it, for this, we'll change the thickness, although I don't usually do that. Reason why I wanted to change it thick and make it very visible is because it is a very, very important line. So you want to, as a trader, go long when the MACD line, which is the blue line, is above the zero line, and when the MACD line, which again is the blue line, is above the signal line, which is the zero line. The MACD line is the actual plot point on the MACD. The signal line is a trailing moving average. So it is considered bullish, or most likely to continue in an upward trend, when the blue MACD line is above the signal line and it is above the zero line. The histogram here, this green and red, measures the strength of that current momentum. So you can see that the green changed to red right here as the MACD line went under the signal line, and you can see it changed once again right here. This had a strong momentum, and then you can see the momentum on that current uptrend started to dwindle. Okay, so to recap, we want to go long when we are green on the HA market bias indicator, when we are blue on the Bjorgum cloud, and when the MACD line crosses above the signal line and even more so when it crosses above the 0 line. Our final indicator is going to be the RSI, unless you want to count the Heikin-Ashi candles as an indicator, which a lot of people do. This, once again, is a personal preference. I'm going to change the color. We're going to change the RSI to, I think I usually do like a light blue. Actually, no, I do like a greenish. And then it doesn't really matter, but I'm going to change this to blue. This also is an oscillator. So we have our directional moving averages, and then we have our two oscillators, which is the MACD and the RSI. The RSI stands for Relative Strength Index. What that means is, let's zoom up here. When the RSI line is above this 70 line right here, the price action is considered to be overbought, and there's likely to be a reversal coming soon. When the RSI line is below, or at least closer, right, close to the 30 line, it is the opposite and is considered to be oversold, and a change in momentum is likely to occur. This middle yellow line right here is similar to the signal line on the MACD. It is a moving average, and a lot of traders will like to use it to determine whether or not there is support or resistance on the RSI. So for example, right here, you can see the line come up, get rejected under the moving average line, come up, once again, get rejected under the moving or the RSI line, come back down, and then bounce right back up, right? So you want to go long when the RSI is using this moving average as a support. It has higher highs on these points, right? And higher lows, right? This is a low, this is a higher low, this is a higher low, this is a lower low, so it was a little bit of a change in momentum for a little bit, and then it continued up. So those are all indicators as whether or not the momentum on the RSI is an uptrend or a downtrend. It also has a 0 line here, so we're going to go and change that. And this one is called RSI middle band. And we are going to change the opacity, and we're going to do the same. We're going to make it big so you can easily see it. Now, this 0 line is the same as the MACD. Overall, the price action is considered to be in an uptrend when the RSI line is above that 0 line, and most likely considered to be in a downtrend when the RSI is below the 0 line. So how do we use these oscillators for entry positions? Well, in conjunction with these other two, you can see that our strategy is to go long when we are green on the market bias indicator, when we are blue on the Bjorgum cloud, when the signal line is above, or I'm sorry, the MACD line, which is the blue line, is above the signal line, which is the yellow line, and when the green line on the RSI, which is the RSI line, is above the moving average. Finally, our final indicator is the Heikin-Ashi candles. Now, the Heikin-Ashi candles just calculate price a little bit differently, as it actually uses previous candles. Okay, so the candle, the current regular actual standard candle, only considers the price of that current day. So how do we, I guess we should get into how candles are calculated, right? So a standard candle, if it is red, means that the open was this top line because it's red. The close was the bottom line because if it's red, it's always going to be lower in price at the end. These are the closing prices. And these wicks right here are going to be the highest point in that day. And the wick is going, and the bottom wick is going to be the lowest point in the day. So let's do a couple other examples. So this right here, this day of August 5th, 2024, because it's green, that means we know the lower bottom of the candle was open. The close was the top. The lowest point was at 509.86. The highest point was 523.17. Okay. Heikin-Ashi candles are different. They consider previous candles. They consider previous candles opening, closing, previous candles wicks, all of that to track momentum. Essentially what they do is they smooth out the price action so that you can focus on momentum more than just that current day. Okay, so we are going to lower this down, and a lot of people will consider a strategy of entering after 2 green Heikin-Ashi candles and closing after 2 red Heikin-Ashi candles. That is a standard rule that doesn't have to be applied to this strategy. What has to be applied to this strategy is when you do use the Heikin-Ashi candles and we open and enter on this first green candle, which would be this one right here actually. First green candle that is all blue on the Bjorgum cloud, green on the HA market bias indicator. We are above the 0 line on the MACD, above the 0 line on the RSI. You're going to continue and follow this momentum until we reach exhaustion, okay? That could be the first red candle. If you like, right here, you can see that we are now crossing below the MACD line. Let me zoom that in. Cross below the MACD line, signal line, I should say. The MACD line crossing below the signal line. And same on the RSI. If we zoom that in, the RSI line crossing below. So what I like to use Heikin-Ashi candles for actually is more of an entrance than it is an exit. Just helps me track as my positions are opened, and after I did open it off of the green candle, helps me track the overall momentum. At the end of the day, this, for example, if this were to turn red and we were to go down and just maybe bounce or get rejected off of this HA market bias indicator, by the time that this cloud would have fully turned red, if we entered right here, we probably would have lost all of our gains. So I keep saying HA market bias indicator for Heikin-Ashi candles. For Heikin-Ashi candles, the benefit of the Heikin-Ashi candle is using it for seeing exhaustion and seeing an exit of when to get out. Okay, so we have the platform that you are going to trade on, Webull and TradingView. The device ideally is at least a laptop. If not a laptop, a mobile phone. And then you have the Bjorgum EMA cloud. You have the HA market bias indicator, the MACD, and the RSI. Now, there are a lot more things to get into. There's one more I want to get into for you right now, but I'm going to switch over to Bitcoin first because it is a little bit more volatile. And we're just going to get rid of this, and we're going to show you support and resistance. Now, there is actually an indicator that you can use for this, and I'm going to show you that real quick, but I first want to give you the idea of what we're talking about, okay? So buying and selling often comes in many waves along a macro sort of trend. That is because people are buying and selling. As people buy at a certain price, a bunch of people buy, the price increases. Now we've sort of exhausted our supply of buyers, and we start to lose that momentum, right? Everything is a pull, a tug and pull based on the supply and demand of buyers and sellers, okay? So you can see often that there are supports and resistances, and ideally you want to buy as close to this trend line as possible, and you want to sell once we reach these resistances, the top of the channels, okay? Now within these channels, there can be smaller ones. If we go down to a smaller time frame, like the hour time frame, there are going to be, as you can see, smaller ones. The shorter time frame that you want to trade, the shorter the channel that you're going to want to trade, okay? So I want to go back to the 1 minute right away. Sorry, the one day right away. And as I said, just to recap, you want to buy on these support levels as we bounce up. So the price comes down here. We start to consolidate, right? We start to use this as support. Now we have a green uptrend on the Heikin-Ashi candles. And right here, we're buying, right? And then we're coming up a little bit of a, now you could sell right here off of this green, or I'm sorry, this red Heikin-Ashi candle, or you can sell as we start to come below this line. It's the VRVP, and this shows support and resistance. Now, I personally like to go in and make adjustments on the VRVP as well, but we're not going to do that today because I don't actually use it on a daily basis. But essentially, you can use it to help you see the supply and demand at each price point. These are often used as supports and resistances. So you can see as Bitcoin is going to be coming back up off of the weekly, it's going to have to surpass all of these different resistances. And you can see that there's actually a pretty strong support right here. You can see why there's consolidation over here. And most likely this is where if Bitcoin were to continue to fall, it would most likely bounce around this 40,000 level. Okay. Now, finally, let's get rid of the VRVP. And one of the most important things that you can possibly learn with trading is time frames. How do you know what time frame to use? Well, the easiest way to put it is no matter what time you want to trade in, whether you want to day trade, when you want to trade throughout potentially the length of the week, which you would be using daily time frame for that. Whether you want to trade over the course of weeks, you want to start on the monthly. Reason being is because, for one, if you get a buy signal on a monthly, that is most likely going to run for a significant amount of time if you're actually trading on the smaller time frames. So you want to see where you are on the monthly. For this strategy, the ideal setup is, you can see we don't have the HA market price indicator here because sometimes it just doesn't pick up on these larger time frames. But you want to go in a long position when you are green Heikin-Ashi on a monthly, when you are, let me zoom this in, when you are above the 0 line and the MACD line, which is blue, is above the yellow line. Right here, we are above the 0 line and we are above the signal line. Okay. Now you want to start big and zoom in. Okay. So even if you're trading on the weekly, or if you're trading on the daily or the hourly, you want to start with the monthly, and then you want to zero in down to the weekly. So you would say, oh, okay, right here, we're seeing a buy on 11/1/23. Go down to the weekly. Where is 11/1/23? That would be right here. That is also, well, at least from here, you'd be like, okay, we're approaching a buy and we're going to wait for this market bias indicator to turn green. Boom, got it. Look how precise that was. This would give you a buy signal around 37,500. You could have brought it up to 72,456, which would have been more than 100% return just off of that. Now, if you are going off of the daily time frame, again, you want to start with the monthly. Okay, we got a buy signal on the monthly. Go down to the weekly. Okay, we got a buy signal on the weekly. Go down to the daily. 11/1/23 right here. This would have been your buy. Now, you would have had to wait a little bit. But look at that. This strategy would have brought you from here all the way up to here. And that's how you do it. So you got your device, ideally at least a laptop. You got your platforms, buy and sell on trade or on Webull. Use your indicators on TradingView. You have the HA market bias indicator, the BJ HEMA is what it's called, abbreviated over in the corner, although it's the Bjorgum Cloud, the MACD, the RSI, your simple view and understanding of support and resistance, the VRVP to confirm the support and resistance, and your time frames, starting big on the monthly and going down. Now, this is, while the most basic of all of these concepts, also forgot the Heikin-Ashi candles, can't forget those. It is sufficient enough to get you started and to be successful as a trader. Now, a tool you can use to practice this strategy is the replay option under Trading View. Now, I continue to use this even though I am actually actively using this strategy with success. Reason being is because it's always important to exercise your muscles, right? So you can go back and trade. So let's just pull up a replay. Now, obviously, this isn't going to be the most unbiased trading because I can literally see it right here. But normally I'll pick a random stock, some random time. I'll try to not pay attention to the price, and then I'll just start buying and selling. But you're going to hit the replay. You're going to hit this guy right here, wherever, just some random spot. And it's 10x, which is a little quick. I like to slow it down a little bit, but just want to give you an example. So this right here, yeah, it was too quick to get in. This would have been a buy right here. It's a little too late to try to get into it right now, but that would be a buy. So you could hit the buy. This is nothing official, right? I already said should probably buy it down there. You can continue, and then certain people will exit out of their strategy at a certain percentage gain, which I also highly suggest because a lot of indicators are late to get you in, late to get you out, right? So if you're at least late in, but you get out on an okay time, you're not losing a lot of your losses. So this is one example of how to trade percentage, profit, and loss percentages, right? So that's all I have for you for now. I highly suggest you use this replay bar and practice your strategy. But this is a very simple strategy. It's 2 oscillators, it's 2 moving averages, and it's occasionally using the VRVP, and it's occasionally using the Heikin-Ashi candles. If you like this video, you want to see more, hit the like button. It is by far the easiest way to help out the channel. If you want to see more content like this, hit the subscription bell, turn on the notifications so you can see all of my latest content. Until then, we'll see you next time. Thanks.